How are you, Adam? It's great
Hey,
to have you back here.
I'm good.
Last time we talked, you were pretty bullish USD CAD, and we had that little pullback in USD CAD. Um,
Yeah, I've been a
was
buyer
that
this
was
week.
that an entry for you?
It was. I woke up actually yesterday morning around this time and yields were up, I don't know, 10 basis points. Dollar CAD wasn't doing too much, maybe like 20 pips off the lows. And yeah, I've been kind of just caught that little wave. I caught the first wave up above, I think it was a 1 year high
Yeah.
earlier, last, maybe
So
not month,
you're
maybe a
looking
6 month
for
low.
what, maybe 141, 143, or
I mean, I
what?
think we get all the way to 145. I'm not really in a rush to get there. I think that's the trade in the US dollar for the next bid. I mean, we're seeing right now, overnight we had a lot of data from Germany. It was poor.
Right.
Canada cannot hold up in high rates. Germany can't hold up with high rates. Australia is still hiking, and you can see what the market thinks about that. The US can hang in there with high rates, and I'm not arguing that the US is going to boom, but it
Yeah.
can do a lot better than Canada, Australia, Germany,
Yeah.
and probably the UK.
Okay.
Well, Japan, we'll
Yeah. I
see where
mean,
they end up.
I pulled up a monthly just for the heck of it, for the hell of it, and
Well, you can see, right?
double top up there.
Yeah, it was a
Um,
heck of a double top when it happened in the
you
pandemic,
know
but
what?
I mean, it was a short-lived double top because the
You
pandemic
know what
was
it
so
looks
weird.
like? Looks like gold. Though gold's had three, but kind of a similar pattern up
Well,
there. Maybe
maybe
we're
we'll
going to
get that
get a
third one.
triple top. Yeah,
I mean,
yeah.
housing is turning over here.
What
The
are
Bank of
people doing?
Canada,
Are people
the,
walking away yet, Adam, from their
it's a
mortgages?
tough, it's a still really brutal situation here. In America, you can give the keys back and you can get out of your mortgage. They get the house. In Canada, it's full recourse, so they can go after everything you have if you signed on for a mortgage. So,
Wow.
that it ultimately helped the US that you could kind of walk away and start over again in Canada. I mean, you're in rags at the end of it. So, the economic recovery from that, if it were to, I mean, I don't think it can get to that level, but it's certainly brutal if you end up defaulting on a mortgage.
Yeah, yeah. Even more brutal than blowing up a spec account,
Well,
right?
nothing's worse than that, yeah.
Uh, so okay, so Canada. It's really the real estate. Consumer spending has to be dropping off then up there.
Well, that's it. Restaurants you're starting to see. You see like the big retailers here have warned for a little while now that it's slowing down. It's not so clear yet in the data, but I think, if we look at the next sort of 6 months of trading, it's trading on economic data and who performs great and who doesn't. And today the dollar's strong, and I think a lot of, some of that at least is on the euro side because the data there was weak. Um, and that's just going to be the day-to-day trade, which I love. I mean, I just love trading economic data, and it's going to last now, I think, for some time. And there's an ebb and flow to it, obviously. I mean, nothing's going to happen in a straight line. And I think you need to have some kind of conviction about who are the winners and losers in this sort of rate environment. And then it will
Yeah,
come down to, the wisdom of central bankers, which is in short supply,
yeah.
to guide
So
us through this.
yeah, Kashkari's out there talking like a hawk. But we had a pretty major move in yields last week, Adam. 10-year peaked up there at 5%, and we pulled back, pretty dramatically. Here's the 10-year.
Yeah,
And you know
so I
what?
think.
Even with a strong dollar, it's not up today. To me, do you think you can make the case for selling rallies and buying notes and bonds? Hasn't it turned into the most hated asset class? It's taking banks down. People have lost 50, 60% of their principal in bonds.
In the long end, yeah.
There's nothing but bearish news about supply, and no one's buying them anymore. I can't remember a market that would give you more reasons not to buy than the bonds right now.
Well, I think, first of all, it's the biggest bubble in history. And if banks had to realize the market to market losses, I mean, this would be something akin to the financial crisis right now.
I heard they
Uh,
finally hedged, and you know what would be the worst thing to happen for them now? They locked in all those losses down there, and they're hedged. would
right.
be a bond market rally. Everyone would think it would be improving their balance sheets, and now that they're hedged, it won't be.
Well, it's like everybody hedges at the worst possible time. Isn't that
Yeah,
the tale as old as time? I mean, when they finally put the hedges on, it all falls apart. I mean, I think like the oil companies that were hedging at like $50 2 years
yeah,
ago,
right.
um, and have just been getting killed since then. And like I think it would revealed a couple things though. This big rally last week in bonds, the fall in yields, and there was a lot of money on the sidelines. I think 5% is pretty attractive, Dale, and so there
Yeah,
there are people that want that, but nobody wanted to kind of catch the falling knife, and then it turned. And what I'm thinking about right now is how much of that was derivative driven, how much of it was positioning driven. We saw there were heavy shorts in a
yeah,
lot
there
of
were.
bond
Yeah.
proxies. So was
The,
that a squeeze? I mean, you assume you have to have real money there. We do get an auction this week. Correct me if I'm wrong. We get threes, tens, and sevens, maybe this week. And so that'll be we'll see where real money is. And then I kind of think we carve out a range here, 4.5 to 475 in tens. We're at 462 today.
yeah,
And I want to see how much real money demand seems to come back at 475, because the people who think maybe they missed that will come back, or 480 maybe, if you look at that chart, that old
yeah.
break.
Like
And
a right shoulder potential,
and
failing rally and not make new highs
yeah, if
might
real
be the
money kind of
trade.
comes in there again and keeps the lid on it, then we can do pretty well, at least into year end. So there's, and that I think is the trade for right now. It's just, but we'll let this. I mean, the data calendar today, this week is dismal, right? A few Fed speakers moving things around, but I mean, trade balance just now a little bit soft in the U.S. That I don't know if the market's going to trade off that.
Right. Maybe the bonds will finally trade off of like crude is breaking down, although I've been told we're at major support. I look at the XLE, and I know you're an energy trader,
Mhm.
Adam, but I look at the XLE, and to me, it looks pretty vulnerable. It was the star of the show last year.
It's
The
been the
oil
star of this year
shares were.
too. It really has. I
Okay.
think it's the best performing sector, other than like the Magnificent Seven, anyway.
Yeah. Well,
Um,
here's your daily. We've been knocking at the door of support a few times. That's weakening the shelf.
yeah, there
And
isn't a lot for the bulls to point to right now. I
yeah,
mean, Saudi Arabia extended the cut yesterday. Not a big surprise, but we
didn't
didn't
help.
get much out of that.
Yeah.
And like this SPR refill is the kind of bulls are thinking that the SPR refill is 79 kind of level-ish. And
Yeah.
that may, but I don't know how aggressive the US wants to come in there. Seasonally, I will say first week of December is the low. There's a seasonal low kind of early December, and maybe that is the spot, because there's a pretty nice seasonal trend in December, through December, January, and then into February. So that I don't
Okay.
think there's a big rush to buy oil, because I see two time spreads are narrowing, crack spreads and refining. Not a big rush, I would say, to buy oil, but a lot of those oil companies are still very cheap.
Well, it looks like Nat Gas, after putting in a real nice rally from round two, is in a pullback stage. I would kind of be looking at this too. I like the structure of this, maybe buying a pullback towards 290 in Nat Gas for the winter, winter spec. Everyone says we have plenty, but you never know. Pipeline could have distribution problems. I know what I paid for nat gas last year, and it was
Well,
way
so much of
above
it's in the
market
delivery.
rates. And it was
The
because of
deliveries.
hedge. It was bad hedges here in California that made us pay
How
what
much
what
natural
nat
gas do you need in California? What are you
for
for
heating,
cooking there? For heating?
heating.
Open the windows. What do you mean heating?
Oh
It's
no,
cold there? You
yeah,
guys like it
yeah. I
warm?
mean, compared to you'd be out in your bathing suit, but
I'd
I'd be.
probably use
I'm cold at 50.
I'd
Okay,
probably
so
use your full yearly allotment one day in
yeah,
January.
yeah. So you like nat gas?
I think it's such a weather trade. The trade I like in natural gas is you buy kind of August and you sell the first cold day in New York, and we had that really last week. It got nice and cold there. Maybe it
Okay.
gets cold again. The forecasts right now are looking pretty warm for November and December, so I think that's the latest kick this week. or some really nice warm forecasts. El Nino is supposed to be warm. I like, yeah, a dip down there. Production should be coming down. The problem is the US is just pumping so hard. The rigs are coming off.
Oh yeah,
Associated gas is a bit of a problem because the oil in Permian is still going pretty hot.
I
But
didn't know
it's a
that.
weather trade. It's a weather
Okay,
trade, and
all right. Well,
I don't know. I'm not a weatherman.
I know you also have some seasonals coming up where you like to buy gold. I think early December, if my memory serves
Yeah,
me,
that's the
is
one.
kind of
It's
the
just
time.
that's probably the best single seasonal trade that I know of is gold in
Wow.
December, or really a dip in November. And I had this drop to 1800, and that was kind of the dip that I'd be looking
Yeah.
for. And it was too early, and I was kind of just hemming and hawing on that drop, thinking, because it's still seasonally weak, and then obviously the
Yeah.
Middle East happens. Maybe we can get back down to 1900 here in December, and that is I struggle to see that return to 1810 or whatever it got to,
Yeah.
but I'd scale in at 19. But probably need some dollar strength. Again, I don't know if it gets there either. I hate to miss it because it's such a good trade.
Yeah.
Uh,
Okay. Well, we'll be
and
looking for it.
every China's buying, the sovereigns are there. I mean, a lot is lined up for gold. We're at the peak of the rate hiking cycle everywhere, as far as I'm
Right.
concerned. That's a huge tailwind for gold.
Do you have a view on silver compared to gold? It's
Well,
kind of been acting. I mean,
I'm like a
uh,
werewolf, Dale. Stay away from silver.
do you?
I
Okay.
I,
All right. Well,
I
I
I
I
mean,
eat
listen,
garlic. I eat
a
garlic.
lot of the EV trades, I think that's kind of one of the, if say it's a three-legged still, you have monetary side, you have a bit of
Yeah.
industrial sand, and then the EV side or the green energy side, the silver was really supposed to put it over the top. But a lot of those trades are getting questioned right now.
Yeah.
So,
I know they were killing solar stocks last week.
solar, lithium, I mean,
Yeah.
anything kind of EV related or green transition related, all the utilities in that have just been blown out. So I don't know
Yeah.
about the timing in that, but no strong feelings in.
Okay. I think we've covered quite a lot of ground. Any feeling about yen? We have this big double top up here. This too would play into a bond scenario, depending upon what your view is. But we got all the way back to last October's
Yeah.
high.
I think I mean, everyone out there should realize what the Bank of Japan is doing here. And we had it before last week. I mean, a week and a half ago. This is twice now the Bank of Japan has done this. So they come out and they ease their easing, or they kind of hike the band or remove the band. But before that, for 3 or 4 days before the decision, they leaked that they were going to do something very hawkish. They leaked it to Nikkei, they leaked it to Reuters before, and then they did something less hawkish than that, right? So
Yeah.
you make a plan, you leak something very hawkish, you do something less hawkish. So you get the market scared, and then you come back. And it was pretty well executed, because the bonds or the currency could have gotten blown out on those moves. But
Yeah. You had this.
that was the fear, right? They started
Yeah.
leaking, and it was 2 or 3 leaks, and they were credible news organizations. And this is the second time they've done it. Now, I don't know if they can do that again. And now it's out there that they want to get out of this extraordinary monetary policy by the spring. So maybe they can just, every central banker wants to move incrementally. The market doesn't always let you do that, right? Like the Fed would have
Right.
liked to have been hiking by 25 basis points to control inflation. Instead, they were hiking by 75, because that's the nature of things. So I wonder if they're getting a little cute here,
Yeah.
and
Okay.
we'll see if that playbook works again, or if they come out with something else. But usually you can, somewhere like Nikkei or Reuters, you can trust a leak, but they're playing games. I mean, those guys aren't making up stories. So that came from the Bank of
Yeah.
Japan,
They're
and it
playing
was a
with yeah, they're
smokescreen,
playing with market participants and using
really.
their liquidity. Are they in the market or just jawboning?
Yeah, I think, I don't know if that had to have been in for intervention back at the start of this chart, or the
Yeah.
last, or whatever, that last time the bottom fell out there.
Yeah. Right here.
Um, I just don't understand what's going on. I mean, those are the leaks. The one at the right hand of that side of that chart, the left hand side is the one they denied that was ever intervention. It wasn't in the numbers either, which it just doesn't make any sense to me.
So
So
maybe it's a good, you know what, after talking to you about the yen, you know, maybe it's a good time not to trade yen, US dollar
yeah.
yen.
If anything, though, I am bullish. I mean, you still have wide spreads,
Yeah.
but yeah, I think there are, like, if you look at Aussie, CAD, Euro. I mean, if I want to be long dollar, it's not the first place I want to be, but
Would it be
it looks
euro or
like that
Aussie?
market's going to go up. I mean, if you look at that chart, it's going back to 150, 150, and
You
there
think
will
so?
be an
Another, we're gonna test these levels again.
100%. I mean,
Okay, then we blow through that double top, and that could set the stage for a high if we get
well,
through
and
there.
then if they do intervene again, look at every time it drops, you buy that dip, right? I mean, so
Yeah.
sometimes you're better just not to be in it, and okay, let them do their thing, and now it's coast is clear, and buy the dip. So
You know,
it,
talking to you like clarified a trade just for me. Okay, because I was like, I don't know, is this going to be a failing rally? But if the narrative you just brought up, we blow through new highs, and while that's happening, the 10-year is not making new highs in yields, right?
right
They're not. And the
now you
bonds aren't
scroll past
making
it.
new lows. That's going to be a pretty good signal. So, you know, yen blows off to new highs, but all we do is get back to 480 in the 10-year.
Well, that could, yeah, and also, I mean, stocks are seasonally pretty positive, right? So
Yeah.
should help that trade as
I
well.
that was one of the sharpest bear market rallies I've witnessed, and I can't remember how
I
long.
remember even through the Fed, we had a chat room. We were talking about people were looking for some kind of dip to get on, to get long
Look at that.
on Wednesday, and it just never,
Never.
there
And
was exactly.
this was Friday's close.
Yeah, wow, just a
So
puke.
anyone that was smart enough, there were a couple guys in our room said they saw it and it was based upon sentiment. So it had to be based upon sentiment because, well, there was a little divergence, but there was nothing great technically. You had to think it broke down under 4,200 and there's a move to the downside coming. Isn't that
Yeah, a
an
lot of ugly
amazing
charts out
move?
there still. And yeah, one way, and even now, it like holding here is
Yeah,
pretty
not
bullish.
giving anything back.
You would expect some kind of dip, some sort of
Yeah,
retreat, especially with yields up. I mean, they're a bit down today, but they were up 10 basis points yesterday, and
yeah,
no sign.
yeah.
So,
The stronger dollar. Um, is the
yeah.
U.S. going to be able to keep their government open? Isn't it this Friday they have to come up with
Oh,
something?
mercy. Man, politics is scary out there right now. A lot. I mean, Trump was he was testifying yesterday in
Yeah,
court,
yeah,
fighting with a judge.
yeah.
The Republicans be fighting amongst themselves here to finally go. I thought it was second week in November. So,
Oh,
I mean,
okay, maybe it
uh,
is. Yeah, all right.
I mean, they probably got to get it done before then. So, it's tempting to tune out of politics. Because
Tempting.
these shutdowns, they don't really move things till you're a couple weeks in. Even the last one, as messy as it was,
Yeah,
didn't
okay.
hurt things too badly. So I'd be not so inclined to worry too much about that.
Okay,
We
well
seem,
then let's talk
yeah,
about something I think that we both could agree is a tragedy, and that's the war between Israel and Hamas.
yeah.
Um, and we have all that hardware there, Adam, massive naval armadas. Um, do you think that Hezbollah is going to open up another front, which would change the whole picture?
I mean, the market was pretty sharp. If you watch that speech on Friday,
Yeah,
it was the leader of
right.
Hezbollah speaking for the first time, and he salted in a lot of the usual rhetoric in there.
Yeah,
But then he, also really gave away the strategy. And it was, well, we're just trying to draw some Israeli soldiers away from Gaza.
yeah,
And that was sort of the leaks ahead of it. And that's all
yeah,
it's been so far. I think if it was going to happen, it would happen. The
yeah.
US seems to really be trying to avoid that. And so I think it's kind of the market has moved on. I mean, the world hasn't, that's for sure. And,
All
and
right.
it's
Well,
horrible.
why don't we wrap it with a country that you pay attention to? There's going to be a summit between Xi and Biden coming up. I think it's being set up. Uh, what do you think is going to happen there? And over the weekend, I kind of wanted to see what did not participate as well with last week's recovery. And really, China did not do much. I'm just looking for the FXI. It didn't have the same magnitude rally that like the S&Ps had. Like
Well, that's been the
there's
story
the
all
there's
year.
the
It's been
FXI.
so
I
there.
mean,
I get people sending me stuff all the time about China and the what do you call it, the politics within China, the palace intrigue
yeah,
of the fighting within. I mean, this death. I mean, the guy, what was he, 58 years old or 60 something? I mean, there there's a little bit of smoke there. I came into the year pretty bullish China, and it had a good January, and it's just been a dog of a trade since then. Because they were coming out of COVID and the stimulus should be coming. They don't have a problem with inflation at all in China,
yeah,
but
they have
they're,
a
they're
problem with
trying to
deflation.
deflate this property bubble, and no one wants to invest there because of potential war and sanctions. And it seems the US and China are trying to thaw things, but how can you really thaw things when you're blocking all these chips, right?
Yeah,
And
good point.
what's going to happen with autos? China's clearly coming for autos, and that's pretty much existential for Germany. And it looks like they're going to lose now on EVs. And next is BYD building a factory in probably Mexico or United States if they can, and trying to sell cheap electric cars. So and again, that's so political, autos. And so
Yeah,
I don't, maybe, but it is an economic summit. I find it very difficult to make heads or tails out of China. It's extremely cheap, though. A lot of these companies, fast growing, Baba, BYD, Chinese
yeah,
tech.
yeah.
I
Here's
mean,
Baba.
they're pretty impressive companies. It's up, that's an
Yeah,
okay move from the low, but yeah, you see the trend.
yeah. I mean, it's
It's
yeah. That's what I mean.
it's poor.
So we'll see.
But I
There's a
mean, at
daily.
some point there has to be a China trade, but I mean,
Yeah,
there's just
after we
no
take out
appetite
the
for it.
yeah, after they take out the lows, the May lows maybe. Um, all right, so China, the Middle East, crude looks, you have that seasonal trade coming up, and the big takeaway is look for entries late November, December, early December for gold on this pullback.
Yeah,
And
gold and oil,
Brian,
I think you'll do well through year end. I mean, next year's about cuts, right? The next big trade is
yeah,
rate cuts, and
yeah,
that's who's going to have the pain until then. And I think you're going to do pretty well in dollar longs, still for a while yet. Now you have a bit of an opportunity to get in, given the drop.
pullback. Yeah,
Um,
I have been talking about 109 in the Dixie for a while. That would be 61.8 back and about a 102 euro. Is that a range that
yeah,
rings a bell to you at all?
I
102?
mean, I'm pretty bearish on the euro, and that's
Okay,
fine with
under
me.
par, under parity?
I believe so. I mean, these numbers are
Okay,
gonna. I mean, right now it's pretty complacent on the gas front. Again, weather is the weather, but that's definitely a downside risk. Um, just the data is it's just poor. It's all poor. Sentiment is poor. The ECB is stubborn. I maybe think about getting long the euro. Maybe 100 basis points into an ECB cutting cycle at the
okay,
earliest.
okay.
So
So
it's either neutral or
you,
negative.
yeah, you wait for them to ring the bell. You don't buy it before they do.
But why? Why would I
Uh,
invest in Europe right now?
yeah,
And in real money or trading? So
or
maybe in the
monopoly
stock
money.
market, like it couldn't rally.
Oh
It
yeah,
hasn't done much.
the DAX way underperformed. Yeah, European bourses performed much worse than the 10% we had here.
Yeah.
So pull back. Great interview, buddy.
Well, it's
Yeah,
always nice talking
really,
with you, Dale. Way
really
to start my
appreciate it.
day.
And the yen, the commentary on the yen, I'll be looking for that see what happens
Yeah.
where yields are at. Should
I
the
think
yen
there's going
take
to be
out
some
that
legs
bubble?
in that dollar CAD trade as well. I mean,
Yeah.
it's really rolling over here. So,
And I think, you know, one thing people don't talk about, if people do begin to embrace the bond market because they got used to getting high yields and their money markets accounts are just going to drop with yields and they start to embrace it, that would mean a reallocation of a portfolio mix. I'm sure it's not with this bear market, it's not 70-30 anymore. People have probably reduced it to 10. And if they start to move back to bonds, that means there's going to be some selling in stocks. It could cause a liquidity problem that the bonds could suck up a lot of that liquidity that's been trading around in other instruments and risk.
yeah, there's a lot of like highly indebted kind of companies there that have just been blown out. Anything utilities, a lot of that
Yeah,
sort of stuff. I mean, the yields in those are really attractive. REITs, but
yeah,
that's a whole different
yeah.
conversation.
So, I mean, maybe the Fed is going to be successful in saving the bond market, but it might be at the expense of the stock market for a while.
Well, certainly they're going to kick and scream. Stocks will kick and scream next year as the economy gets worse and the Fed doesn't signal a cut. So, you know,
Yeah.
we've seen the Fed now for 2 years saying we're going to stay higher for longer. And I believe them
Yeah.
until, you know, they will crack
Until
at
you
some point.
can't.
Well, it's just going to take
Trust.
some kicking and screaming. The market's saying, hey, like cut already. And
Yeah.
Powell's saying we have to make sure inflation gets to 2. And a lot of central bankers are going to do that. And they'll be paying and we'll be there to pick up the pieces because they will cut.
Yeah.
But,
My trading warrior brother, Adam Button, everybody. Tune in to Adam on Forex Live.
yes.
He's a great journalist. His writing, that's his background.
And
Was
I will be in
journalism.
London at the Finance Magnets London Summit. For any of you traders in London, you can sign up for
Oh,
that. So
when is
I'll
that?
be at the 21st-ish, around 1st, 2nd, 3rd of
Of
November. So
Okay.
yeah, it'll
Wow.
be a fun trip
Okay.
over to London, and we'll see how you
The
know, I'll do
loony's
my
doing well.
pub indicator there. We'll see how busy they are.
Okay. Well, you know, I work with a couple of guys that know the pub indicator over there. You
You
know,
know,
Ryan.
it's well researched over there. Very,
Yeah.
very well
Yeah.
researched. A
You
lot
know,
of on the ground.
Ryan. Yeah. Anyway, I hope you have a great time there, Adam, and a safe, successful trip and a safe journey home to your family.
Right on, Dale.
All right, buddy.
Thanks for having
Thanks
me.
so much. Adam Button, everyone. Follow him at FX_Button and at Forex Live. Important to know what he's thinking. He just proved it again today. So
Thanks.
don't just count your pips, count your blessings. Adios, everyone. Thank you again, Adam.
Cheers,
See ya.
everyone.
You're welcome, Alexander, Ingmar, all you guys. Adios. See you tomorrow. You're welcome, Laura. Patrick, I've answered your message, Patrick. I think I forgot to put a phone number on there. Okay. Send it again. All right. I'll talk to everyone tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.